a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. AI momentum, ASML reports leading equities higher today after showing fresh evidence of strong chip demand. Mission not quite accomplished. Inflation eases, but Fed Chair Warsh says the job isn't done. And an exclusive interview this hour with Zoom CFO Chang on the growth of the 15-year-old company. All right, it is all kicking off again with the chip space. We'll take it over to Asia and see what's been happening over in Asia with Winnie Su in Hong Kong. Hey, Winnie.
Good morning, Bonnie. We are seeing Korean stocks leading broader Asia higher again today, with the Kospi up more than 6%, led by the surge in SK Hynix. Now, that's coming after better sentiment, with the U.S. ADRs up more than 27% the day before, and that is driven by how options were made available, as well as a target price set, a pretty bullish target price set for how the SK Hynix will be narrowing its valuation gap with Micron, as well as how the memory chip, the rally in the memory chip will continue going forward. Now, flip the board, we take a look at the broader Asia market, because overall we are seeing further strength on the tech rally, also supported by the softer U.S. CPI numbers, as well as those earnings from ASML. Now, when it comes to the mainland Chinese market, we are seeing a bit more softness after the quarterly GDPs coming slower than expected, while we are seeing a bit more strength when it comes to currency following a stronger fixing.
Yeah, interesting. 4.3% for the second quarter, below the official target. Winnie, thank you so much. Winnie Su there in Hong Kong. Now let's get over to London for a look at the European session with Justina Lee.
Good morning, Bonnie. Now, it's generally a pretty quiet day in Europe, with the Stocks Europe 600 unchanged, even though we had some pretty good beats from Richemont and from ASML. But generally, of course, an update for oil is a bad day for European stocks, and we can see a bit of that in German stocks today. Now, when it comes to the bond market, yesterday, obviously, we all got some relief from those US CPI numbers, but on the long end, German bond yields are still up. And now if we flip the board here and we look at natural gas, and we always talk about oil, but gas is also being affected by tensions in the Middle East, and of course demand for energy with this heat wave in Europe we're going through. And you can see that it's reached the highest in a few months. And I think this is what we also need to watch out for when it comes to inflation and energy costs, especially with kind of Europe already starting to refill those inventories of natural gas ahead of next winter, Bonnie.
Absolutely, Justina. Thank you so much, Justina Lee. And I'll take the baton and show you the price of oil, because it's been a fourth consecutive night of strikes on the U.S. part when it comes to Iran, and President Trump is threatening to increase and escalate those attacks until Iran relents on the Strait of Hormuz. That said, oil, while it's holding on to its gains, it's not gaining even further. We have Brent crude trading just below 85 and WTI just below 80. And interestingly, further out the curve, we're not seeing that much of a premium either, so it's pretty flat, the 6-month curve on oil, even though the outlook for the Strait is pretty cloudy at the moment. Let's take a look at bonds, because wow, did we see that bear steepening move. Well, we'll take a look at futures first. We have ASML setting the tone here, basically saying all is well in demand for massive machines that make specialized chips, and that's setting the tone around the world really for equities. That, and of course the CPI data yesterday, which was way more benign than the market expected. And to that effect, let's move it to yields, because we did see the 2-year yield come right back down. We're still, relatively elevated, but the market hasn't priced out a 1 month decrease in rates as quickly after a CPI report since 2008. So that was a pretty big statistic that I saw. 30-year yield still pretty elevated, though, at 5.10. All right, let's get to some individual market movers now. We'll go back over to London and Chloe Melly.
Good morning, Bonnie. PayPal is soaring this morning in pre-market after a report from Reuters that Stripe and Advent International are considering a $53 billion takeover for the company. This comes at a time of a lot of weakness, actually, for PayPal. And so we are seeing investors quite keen about this potential deal there. So up very strongly for PayPal. Moving on to Europe, where we've got ASML, which you've just mentioned, Bonnie, which has upgraded its guidance and really confirmed that there is this continued demand demand for chip-making equipment thanks to this AI boom, this AI spending spree. And so this reassured investors across that tech sector this morning, and we're up 4% for ASML. And finally, over in Switzerland, the watchmaker Richemont is up this morning very strongly as well after sales came in way ahead of expectations, driven by the US demand for Cartier jewelry in particular. And we saw that driving the rest of that luxury sector as well this morning, with LVMH and Hermes also in the green in Europe.
Chloe, thank you so much. Chloe Malley there in London. She'll be back a little later this hour. Also coming up in this hour, Cayla Seder of State Street on investor risk appetite. Let's kick things off, though, with ASML's strong results. Bloomberg EMEA tech editor Shona Ghosh joins us now. So ASML giving us a read on demand as far out as 2028. That's pretty unusual. It's almost becoming like a Boeing at this point, Shona, with these massive machines and, trying to build them as quickly as possible.
Yes, so the question around ASML is not so much demand. We know there's demand. As mentioned, there's a big artificial intelligence spending boom going on. Lots of ASML customers are building fabrication plants. For ASML, the question has often been about supply. Can it build its complicated modular chip-making machines quickly enough to meet the demand? So here, ASML is showing confidence, saying actually we can ramp up production and increase capacity, which is good news in a market where we've got memory chip shortages, we've got a lot of demand, people saying more. So it's a good sign, it's a positive sign that ASML is saying yes, we can ramp up capacity. It's just a question of whether investors across the board will see it as enough capacity to sort of unlock some of those bottlenecks.
China's contribution to system sales was down to 14% from 19%. Shona, I'm curious, is China actively dialing back its AI investment, or is it just that other countries are ramping up so much?
So ASML is impacted by the US export controls, so it's not allowed to sell its absolutely most advanced machines to China, and its most advanced machines cost 400 million euros, so $400 million, sorry. So it's a big chunk of change at the top. And so it simply can't ship its top machines, and it's even limited in terms of the repairs and the maintenance it can do in existing machines. So actually it's not unexpected that you would see a slowdown in business from China and an uptick from the US and other Asian markets, particularly Korea, where most of its largest, and Taiwan, where its largest customers are located. So I think you'd probably expect to see the China business slow down a little further over time.
Shona, thank you so much. Certainly a halo effect on global equity markets today. That is Bloomberg's Shona Ghosh. Fed Chair Warsh will be on Capitol Hill again today to testify before the Senate Banking Committee this time. That's at 10 a.m. New York time. He spoke before House lawmakers yesterday for his first semi-annual testimony before Congress.
If we get policy right, and I can assure you we will, the inflation surge of the last 5 years will be a thing of the past. The members of our committee have no tolerance for persistently elevated inflation, and we share a resolute commitment to ensure price stability.
Joining us now is Bloomberg senior editor Alistair Bull. So we got the testimony and we also got the CPI data. Alistair, do we have now any inclination as to what the next move will be? Is it back to, well, could be up, could be down?
Not quite. Good morning. So first and foremost, Warsh had a good day yesterday. He got pretty lucky with the CPI print, which was much better than expected. It takes the pressure off him to hike in July. He didn't take it off the table. He continued to talk tough on inflation. But the truth is that the numbers are going in his direction. There's smart people, including Bloomberg Economics, who think that inflation has now peaked in May. If that proves to be the case, Warsh can continue to talk tough, but sit on his hands, keep rates on hold. And as the data continues to come out and we get several more months going in the right direction, they will stay on hold and the narrative will turn to cuts. But it's premature to do that, as he said. We've got PPI coming up. We've got a lot of other data to come. There's renewed tension in the Strait of Hormuz. The oil price is up. And those things could easily push in the other direction. And I'm sure that the market, which is still priced for a rate hike this year, is going to keep the thought of an insurance hike in the back of its mind in case the numbers do start to turn up again. Bonnie.
Yeah, just curious. You know, we may see inflation data reversing. It's likely, in fact, but can we at least say that maybe tariff pass-through is out of the way now if oil pass-through isn't?
I think that's probably true. I think the Fed's own research shows that to be the case. There was a speech, I guess it was on Tuesday, by Governor Chris Waller, who made that very point, that the bulk of the tariff inflation has passed through. Now, that doesn't mean other tariffs can't come into play and create another shock, but from what they can see now, that is mainly passing through. Now, Waller's speech was important because it laid out two scenarios. One scenario where inflation continues to trend down and the Fed can stay on hold, and another scenario where the widening of price pressures out to core and to services and goods inflation means they may have to tighten again. Now, he pinned a lot on the CPI print, and if he said it came in hot, they probably have to consider a near-term hike. It didn't. That takes the near-term hike off the table. But that peril still remains as the data comes in, which the Fed will watch very carefully, and expect Warsh to remain hawkish. He has every incentive to persuade markets that if he has to raise rates, he will. And I think they've taken him at his word.
Alistair, moving to China, we got Q2 growth coming in at 4.3%, lower than even the low rung of the target that officials had set. Does it mean we'll see stimulus, or will they hold back?
I think that there's a strong expectation that they will enact more stimulus to push back into that 4.5 to 5% range. Let's not forget that for the first half overall, growth is still running at 4.7%, which is comfortably within that range. But the expectation is that they will do more, but probably on projects, infrastructure projects, which are already in train. So they're kind of more shovel ready. Vonnie.
Alistair, thank you so much. Global central bank and monetary policy outlook there with Alistair Bull. Now to other top stories trending on the terminal this morning. President Trump backtracked on his plan to impose a 20% charge on cargo shipments going through the Strait of Hormuz, saying Gulf allies urged him to drop it. Trump says the expected revenue will be replaced by direct investments in the US from Gulf states. Stripe and Advent have offered to buy PayPal at a valuation of more than $53 billion, according to a Reuters report. The firms are offering $60.50 a share. Stripe and Advent have not received a response from PayPal. It's surging, though, in the pre-market. And Richemont shares are surging too after sales grew almost twice as much as expected in the 3 months through June. The 20% growth was spurred by a high demand among wealthy Americans for Cartier rings and bracelets. Richemont sales are thriving despite a broader slowdown in the luxury sector. Coming up, a conversation with Zoom CFO Chang. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. It is time now for our CFO briefing, where we speak to leaders on what investors should be watching. Joining us, I'm pleased to say, is Chang, CFO of Zoom. We also have with us Bloomberg Senior Editor Nina Trentmann. So, Michelle, let me get to you first. The company is turning 15 years old, which is sort of difficult to believe. What happens at this point with growth? We obviously saw the massive COVID boom and then maybe a little bit of a drop off. Yeah. Where do you go to from here?
So first, we're here, celebrating the 15-year anniversary of Zoom, and what has remained throughout those 15 years is just a deep respect and love for our customers, and really making sure that we're focused on the value. But the company, to your point, has been reinventing itself since the pandemic. So focusing a lot on product diversification, on infusing AI in everything we do, and a lot of where we're headed is all about a concept we like to talk about called system of action. So how do you go from conversation, which Zoom has always been known for, our meetings business, and move that into action? So it's something we're really excited about because of what it can mean to our customers. So.
Just to follow up on that, actually, I'm curious, could you talk a little bit about that new product enhancement that you talked about and how AI comes into the fore?
Yeah. So, when we think about going from conversation into action, there's so many products then that can go into. So Zoom has built not only the meetings business that we were obviously known for in the pandemic, but a phone business, a contact center business. So a lot of the same red thread being that conversation into action. And to your point, AI is what enables that action. So picture a day where we can be in a meeting and it's no longer just about the conversation. AI is listening, is taking the notes. If you can't make it, it informs you after. And you don't have to wait till the end of the day to get to action. You can just be having those moments in the meeting, whether it's updating another system of record like Salesforce. So super excited about what that means, again, to our customers.
How exposed are you to costs? AI costs, of course, is a huge topic, I think, for executives, specifically for CFOs. How does the company manage that part of the AI story?
Yeah, I think there's not a tech CFO alive that isn't very focused on tokens, and frankly, it's not even just in tech. So look, it starts with visibility and making sure you've got kind of a handle on those expenses, making sure with any expense that you're forcing the trade-off. But to be honest, where we're more, making sure that we're pushing things is what's the true value to the company? It's no longer just that world where it's AI for AI's sake. You've got to have a concept of what it's doing, for the company.
Well, because investors will sell your stock if you don't, right? That's something. That's one of the imperatives here. Yeah. Let me ask you. You did do something very wise. You bought a stake in Anthropic. It's now worth $1 billion. What are you going to do with that billion?
Well, we're not saying what we're going to do about it. Look, Anthropic has been a great investment for us, as you know, and also a great partner. So the concept of what we did with Anthropic is something we do with many different companies, which is we try and invest early stage in technology that we think will be important to kind of our AI future, primarily these days. And so Anthropic is a great example of that. And those early stage investments allow us to understand where the tech is going and to build that in. And ultimately what it does for us at Zoom is make sure that we have the best quality and also that we're able to kind of, monitor costs and having different providers, not just our own SLM, but other LLMs like Anthropic, like OpenAI, is really, again, in service of our customers.
You've been CFO for about 2 years, coming up in October, I think. I'm curious, you made a few changes when you took over as CFO, including tweaking the company's buyback strategy. Can you talk a little bit about that?
Yeah. So look, I say before I get into the buyback, my focus as CFO was really to come in and make sure that we were inflecting our revenue growth. That's the best thing we can do for our shareholders, was to get that growth. And we've made great progress going from 2 to 5%. But as you can imagine, lots of other changes in terms of maintaining profitability and shareholder return. And so one of the things that I thought was important, investors were giving us feedback about capital return to shareholders. And since then, we've issued $4.6 billion of buybacks and executed against 3. So it's something that I'm very proud of, that we've made that more of a predictable measure for our investors.
Speaking of career history, you spent 25 years at Microsoft before moving to Zoom, and you were responsible for Teams. That was your division.
In the pandemic,
Yeah, crazy. So I'm curious, what did you bring with you to Zoom from that role? And also, is it a little chilling seeing what's been happening to that sector?
Yeah, look, I had the pleasure of working under 2 amazing women CFO at Microsoft, so many great learnings there. I think probably my biggest learning from Microsoft that is so relevant to where Zoom is about how to work through transformation. And look, tech delivers, endless streams of transformation from cloud to AI. So it was, how do you keep a focus internally, and how do you tell that message externally about where you're going, and make sure that people aren't confused on the biggest priorities?
Give us the secret.
Look, for Zoom, what we've talked about is, hey, there's 3 priorities. There's 3 business priorities. We're going to be about infusing core AI into our core products. We're going to be about scaling contact center. One of the product diversifications that Zoom is really seeing success in is our contact center business. So we're going to be about scaling that. And then we're going to be working to bring new forms of AI monetization on. And so it's that 3 priorities. Every dollar we invest, every conversation we have to show progress to our investors, all centers around those 3 priorities. So it's not different inside the walls of Zoom than it is out. So.
Maybe one quick follow-up before we have to wrap up. I'm curious, in the past, of course, organic development was one of the hallmarks of Zoom.
Yes.
How do you think about deal making and adding to that products?
Look, our CFO, or our CEO, excuse me, Eric, has had such a great history of building amazing products. But in an AI world, there's a different time, and I think you see it reflected in a lot of what Zoom has even done in the last 6 to 9 months. We've acquired now 3 companies, so I think it is a different era as things speed up in an AI world, and so it's something that we're both embracing sort of our traditional build model as well as acquisitions.
Well, congratulations on Zoom's 15 years, and it was lovely to have you in studio. Typically, we have guests on Zoom at this hour, so very nice to meet you in person. Michelle Chang, CFO of Zoom, and of course, Bloomberg's Nina Trentmann. And do check out Nina's CFO briefing newsletter by using the QR code on your screen right now. Time now for your front page news. And first up, the New York Times reporting China's economic growth of 4.3% in Q2, reflecting a broad slump outside of the country's export-oriented manufacturing might. It was the slowest quarterly growth rate in 3 years. Next up, the Financial Times reporting Ukraine will be allowed to spend funds from an EU defense loan on Chinese drone components. And finally, the Washington Post reporting officials are investigating whether Taco Bell restaurants played a role in the illness outbreak caused by that parasite that contaminates fresh produce. Coming up, we're going to be speaking to Cayla Seder of State Street. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. AI momentum, ASML results lead equities higher after showing fresh evidence of strong chip demand. Mission not quite accomplished. Inflation eases, but Fed Chair Warsh says the job is definitely not done. And oil rising for a third straight day after another wave of strikes by the U.S. military near the Strait of Hormuz. And that's where we'll start with a look at oil, because we're staying with that 85 handle on Brent, just below 80 on New York crude. Now, it is maybe a little consoling that further out the curve, we're still relatively flat. So the president reversing course on that 20% reimbursement, talking about trade deals instead, might be impacting this market. The future of the Strait, though, still pretty cloudy. And we did have a 4th consecutive day of strikes against Iran, and President Trump saying he is going to escalate attacks until Iran relents on Hormuz. Let's get to the rest of the market, because CPI data, the Fed's, Warsh's testimony, all impacting the equity market yesterday and today. But ASML is also casting a nice glow over this market, talking up demand for their huge machines right through 2028, and that helped in Korea, up more than 6% there on the Kospi, and that's bleeding as well into U.S. equity index futures. Take a look at the yield curve, though, because that's where we're seeing really the most movement in the last couple of days. The 2-year yield back down to 4.2039. Massive bear steepening move after Warsh's testimony, but particularly the CPI data, which was much more benign than the market was anticipating. And it was a pretty steep drop in the expectation. We had been pricing in a rate hike in July, and now we definitely are not going to be looking for a rate hike in July. 2-cent spread there, back below 40 basis points. Let's get to some individual movers now. London calling with Chloe Melly. Chloe.
Good morning, Bonnie. PayPal is soaring in pre-market trading this morning after a report from Reuters that Stripe and the private equity firm Advent International were looking for a $53 billion takeover of that company. And so we are seeing that really drive the shares very strongly this morning, up more than 16% for PayPal. Moving on to ASML, which has upgraded its guidance and also laid out plans to increase production. This really confirms this AI momentum, this AI spending on this chip-making equipment, and this is something that has reassured investors across that tech sector this morning. And we're seeing ASML up almost 4% this morning in the Netherlands. And finally, going over to Switzerland, where Richemont has reported sales that were way ahead of expectations, thanks to wealthy Americans buying a lot of Cartier jewelry, and then every region actually having very positive sales as well for Richemont. So this is the first big luxury company in Europe Europe to report, and this might be boding quite well for the rest of that sector, with earnings reports expected from LVMH, Hermes and Kering over the next few weeks as well.
Yeah, the upper part of the K for the consumer definitely working this quarter. Chloe, thank you so much. Chloe Melly there in London. June's CPI print showed inflation easing, but Fed Chair Warsh says there's more work to do.
It's one data point. The reason I create a task force on data is I don't want to overread or cherry pick data. There might be some that look at this morning's data and say, oh, mission accomplished, everything is swell. That is not my view.
Cayla Seder, macro multi-asset strategist at State Street, joins us now. Cayla, the market obviously priced out the July rate hike, but is it pricing in a victory maybe too quickly?
Yeah, that is the concern, that the market will get so excited that inflation is coming down and, the Fed can claim success. And as we just heard from Chairman Warsh, that's not the case. I think there's a couple factors to think through. First, the Fed has been off target for 63 months now. So I think, the market should be skeptical that we won't see reversal. Part of that, too, is that when we look at what's happened just over the past couple weeks, we've started to see upside in commodity prices again. And even when we look under the surface, something that we're paying attention to a lot at State Street is the whole influence AI could have on inflation. So this time last year, folks were saying AI could decrease R-star because of the impact on the labor market. What we've learned over the past year is the labor market is still strong. There's actually tightness on the supply side. Simultaneously, you have AI influencing inflation to the upside, creating more productivity. And so I think when we look at some of our daily measures of inflation and price stats, what we see is very, very high electronics prices. And so that's one example of something that's in core that could still lead inflation higher. And so even though yesterday's print was, let's say, very benign, you have geopolitical factors and you also have structural factors.
Well, that's the thing. I mean, the market was so relieved yesterday, right, that you have to wonder if there's a bit of a reversal next time around. And there's likely to be at some point soon, because of these oil prices that went right back up. Does the market basically freak out again?
I think freak out is a good word to use here. One thing I look at when we look at nominal yields, breaking it down into real yields and break-evens. And when we look at break-evens yesterday, the move was quite large, and we saw this big drop in break-evens. And so I think when we think about mechanically what would increase rates here, I think there is room for reversal on that break-even side, and so we should see yields move a little higher over the next couple weeks.
What happens if we get a weaker employment report than we'd like to see?
I think it depends on what's driving that weakness. So at this point, I would focus more on the unemployment side and also pay attention to what's going on in the participation rate. If the participation rate fluctuates, that's an important signal. So looking within the data there, but also, the market does tend to overreact, I think, to these NFP prints. When we get a low NFP print, that's not necessarily a bearish signal for the overall economy, because that could be reflecting supply, where we just don't have enough folks to increase that NFP number. And when we think about the break-even rate within the employment picture, we really don't need very strong NFP prints to keep unemployment stable at this point. So I really think, looking through low NFP numbers, focusing on employment, as well as focusing on wage growth. If we're in an environment where inflation has come down, actually, and we're starting to see wage growth accelerate or stay strong, that's a signal that demand could still be very strong, and ultimately that could also prove inflationary moving forward.
It seems like we've been waiting for so many factors to appear. So the influence of, immigration, for example, the influence of the World Cup. I mean, are some of these behind us? Are some of these baked into the data at this point, and we can sort of put them behind us as concerns in the sense that at least we know the outcome? Or are we still waiting? I mean, even tariff-induced inflation.
Right. There's a lot of factors, and I think that's one thing that's interesting with the current administration that is actually an inflation risk is, for example, with tariffs, if you just saw a one-time price increase, that wouldn't be inflationary, because ultimately that would ease out of the numbers. But if we start to see tariff policy shift, that could be inflationary. Also on the commodity front, we're living in this example where we had the good news on the MOU. that has since been reversed. And so you see these fluctuations. These fluctuations can be much more inflationary than just a one-time hit. Also, on that structural employment front, one thing we're looking at is what parts of the economy or what parts of the labor market are seeing less job growth, and how does that compare to wage growth? And when we look at that wage growth, it's actually sectors that have seen job contraction see wages increase the most. And so to us, that's a sign that employers are struggling to find the workers they need and are having to pay more to attract those workers. So that's a supply side issue on the labor market.
You know, one-year inflation swaps did drop below 2% at one point. Are we going to see a continual repricing, you know, over the next few months? And what is State Street expecting for, you know, the next Fed move and when?
That is the question. You know, I don't think it's out of the question to expect at least one hike at this point. Certainly not in July, probably more so Q4, just to see where the data do shake out. You know, the message we got from Chairman Warsh yesterday is, you know, he needs to see consistent prints essentially. Otherwise, he'll stay more hawkish. And when we think about, you know, what is an ideal world for the Fed right now, it's lower inflation at this point. When we think through some of the policies Chairman Warsh has talked about, a smaller balance sheet, for example, less need for communication. Both of those things are much easier when inflation is not an issue. And so I think that's why it makes sense for him to be very persistent in more of his hawkish speak, because he doesn't want to overcommit to anything too early.
Speaking of the balance sheet, he said, you know, we are not going back to the 2006 balance sheet. That ship has sailed.
Yes.
Where do we go, though? I mean, it has shrunk a little bit, but, you know, how much more can it shrink?
That's a great question, because, you know, we're not quite where we were pre-COVID. It would probably take a little more than $1 trillion of shrinkage there, which still is quite a bit. I think really what it comes down to is, you know, what can the economy do with fewer reserves? And so we hear a lot of discussion around decreasing banks' demand for reserves. And some of that can happen through regulation. So we've heard a lot of discussion about that. But ultimately, what we would need to see is, you know, banks being able to do more with fewer reserves, become more efficient. So far, what we've seen is the central bank's the economy rather, is not able to handle that at this point. There's a reason why just this week, Roberto Perli, who runs SOMA, announced that the Fed is going to continue their reserve management purchases at the current pace. Part of this is because we still see increased issuance. And so as we see more issuance on the fiscal side, it's very challenging for the Fed to shrink their balance sheet.
All right, well, we'll see what we hear from Mr. Warsh today. Cayla, thank you so much for all of your thoughts post-CPI and the Fed Chair's first day of testimony. That's Cayla Seder of State Street. Now to other top stories trending on the terminal this morning. Stripe and Advent have offered to buy PayPal at a valuation of more than $53 billion, according to a Reuters report. The firms are offering $60.50 a share. Stripe and Advent have not received a response from PayPal. Richemont shares are surging after sales grew almost twice as much as expected in the 3 months through June. The 20% growth was spurred by high demand among wealthy Americans for Cartier rings and bracelets. Richemont sales are thriving despite a broader slowdown in the luxury sector. Spain advanced to the FIFA World Cup final after a 2-0 victory over France. They were able to shut down an impressive French attacking trio led by star Kylian Mbappe. Spain will face the winner of Argentina versus England. And that'll happen this Sunday at MetLife Stadium in New Jersey. Coming up, President Trump vows to intensify strikes on Iran until it stops attacking ships in the Strait of Hormuz. Details next. This is Bloomberg.
I'll save the energy targets for last, but ultimately we'll hit energy targets, yeah. But we're going to hit them very hard tonight. We're going to hit them very hard tomorrow night. We're going to hit them very hard the night after. And then next week it gets really bad for them, because next week comes the power plants, next week comes the bridges.
President Trump keeping military pressure on Iran for a fourth day and continuing. U.S. forces hit Iranian military targets overnight again. Kate Ackley of Bloomberg Government joins us from Washington. So, you know, he's threatened so many things, but we are now back into a fourth day of strikes on Iran. We're hearing of, hundreds of people injured at this point. Kate, does this continue? Will he strike power stations? And, he's threatened desalination plants and so on. Will he do it, Kate?
Well, we have seen this before where there was, sort of using this to get closer to a deal, but that memorandum of understanding with Iran obviously seems to have not held up. So, it's a very volatile and uncertain situation. And as you know, it has this ripple effects in the oil prices and all this stuff that has to get through the Strait of Hormuz. So it's something that, people are watching obviously very, very carefully. There has been, like you said, 4 days of more bombing. If you look at the situation, back here at home in the United States, this conflict in Iran has hurt President Trump's polling numbers. It's hurting, then Republicans who support it, hurting their poll numbers as we're, really about 4 months out from these pivotal midterm elections, which will decide control of the House and the Senate. So that's also top of mind for the White House team and for the Republicans on Capitol Hill. And we've seen Democrats this week, lawmakers have come back to Capitol Hill, and Democrats are talking about the situation in Iran, and they are, using it as a messaging point, if you will, that to go against Republicans.
Yeah, and I mean, nothing is getting any better. The Strait of Hormuz at one point was way more open than it is now. I mean, the UN maritime chief actually told Bloomberg just in the last few hours, it is not safe. And we know that ships are just dribbling through, if at all, at this point. So the carrot approach didn't work, I guess, if there was maybe a carrot. The stick approach is not working. Is Iran just going to wait this out for a lot longer?
Well, and then there was this idea floated. President Trump floated the idea of charging, 20% on shipments going through the Strait of Hormuz, and backed off of that after, U.S. allies in the region pushed back on that. So, you see these kind of ideas be floated, how to deal with the situation in the Strait of Hormuz, which is this very important thoroughfare, especially for oil and gas, but also other things, helium. Many things sort of go through that strait. So I expect you will see other ideas floated, and the administration will be seeing what might stick, while they also, sort of have this back channel negotiations going on to resolve the conflict.
All right, Kate, we will obviously continue to monitor the situation. Thank you so much. Kate Ackley of Bloomberg Government. Let's turn to what's driving equities higher today. It's ASML lifting its annual sales forecast for the second time this year. A surge in AI spending driving demand for the Dutch company's chip-making machines. Joining me now is Bloomberg senior strategist Neil Campling. So we know that there's going to be huge demand until 2028. Neil, are these clients locked in, or at some point could that demand, drop off? I mean, it's a bit like Boeing at this point. You're looking at deliveries as opposed to, anything else. Any other metrics?
Yeah, we're looking obviously at the long term here rather than the single individual quarter numbers, Vonnie. As you mentioned, because if we look at it, we know the AI narrative is very strong in the short instance from all of the sort of anecdotes that we're seeing. The key coming into this was clearly about how high they'd be able to raise guidance, and crucially, short term for the stock and momentum, they managed to raise guidance for this year for revenues above all street expectations. So even the most bullish estimates were bettered in terms of the guide. The conference call, which will come at 9 o'clock New York time, is definitely going to focus on what happens in the long term in terms of are they able to create enough supply and the equipment to meet that huge AI demand. There's clearly going to be no real colour yet on what happens longer terms in terms of the demand dynamics, but certainly given the fact that demand is so high, the key is going to be that they can match in terms of the supply. And that's been the concern going into the print. And there's a bit of a catch-up trade here because ASML has actually underperformed their peers and the SOX index year to date into today's numbers.
Yeah, it's only up something like 60+%, right, Neil? Speaking of, crazy pricing, SK Hynix all over the place. The ADRs are trading at a 51% premium now to the stock in Korea. Who's right? I mean, is it trading at a discount in Korea, or are we way overpaying here in the US?
It's, I think one of the attractions of the listing in the US was certainly that when investors want to play the memory trade in AI, then it's been somewhat limited in terms of these kind of HBM chips to just playing Micron. So now you have another alternative. There are technical factors going on here between the listings of the different stocks. So I think we're going to, an options market started trading yesterday as well. And so for the time being, there are factors at play in terms of options, in terms of short sellers positioning, in terms of index positioning. There's a whole range of factors which will probably narrow that in the course of the next few weeks. But volatility will remain. Keep an eye on that.
Yeah, that does not surprise me, Neil. At this point, Neil Campling, thank you so much for joining. Morgan Stanley releasing results before the opening bell, rounding out big bank earnings already for the second quarter. Joining us now is Bloomberg Managing Editor of EMEA Finance, Tom Metcalf. So, Tom, if yesterday is anything to go by, really everything is green and golden and there are no problems out there. Is that what we'll hear from Morgan Stanley?
Well, I think they better deliver on that line, right? Like the bar has now been set so high, particularly by Goldman Sachs on the equity side. So, I think that's probably the new challenge Morgan Stanley's just been set is can they meet, those expectations, which presumably after yesterday have just been pulled even higher. Certainly, as you look across the 5 banks that reported yesterday, it's just like, wall-to-wall strength really in the trading business. Obviously, that's a big part of Morgan Stanley's world as well. And for me as well, the other interesting thing will be, with a huge wealth business, what are they seeing, investors doing? Presumably piling in to equities, piling into investments still. But sometimes you kind of extract some sense of, is there a little bit more, perhaps from a certain subset of those wealthy investors, a certain set of kind of more caution perhaps? Yeah,
I mean, really only Citi, maybe disappointed yesterday, not even talking about the stock price movements really, but the actual results, and still their trading quarter was phenomenal. Have we put to bed all of the concerns that might have been out there, the so-called cockroaches and so on?
Yeah, it was interesting to watch yesterday. So, Citi and JP Morgan both sort of maybe slightly spooked the market as well. Funny as it might be, because of that bottom line they were looking at, right? So your JP Morgan effectively saying, hey, it's our year-end costs will probably be somewhat higher. That is obviously the last thing shareholders want to hear. And then on the Citi side, they started strongly out the gate, but then you had the CEO, Jane Fraser, just sort of flagging, hey, we might be investing more in the kind of coming months. And again, shareholders took that and thought, what kind of costs are we going to have coming up down the pipe? And that's partly why you saw the Citi shares drop.
Yeah, which definitely investors prefer costs than they prefer problems, I'm sure. Tom, thank you so much. Bloomberg's Tom Metcalf. This is Bloomberg. Now look at what is ahead today for your trading day. Another read on U.S. inflation. We get PPI data out at 8:30 a.m. New York time. And then, of course, Morgan Stanley reporting before the bell. We also get United Airlines, though, after the close. And it is day 2 of Fed Chair Warsh on Capitol Hill. He testifies before the Senate Banking Committee at 10 a.m. This is your macro picture for the day. The Nasdaq looks to be about to open higher in a few hours. This on ASML, talking up chip demand right through 2028. Brent crude, as we've got 4 consecutive days of strikes now, and that 2-year yield back to 421.